Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 2nd of the 8th to Friday the 6th of the 8th, 2021. We've written up the week's flows to get us underway. We're going to start this video as we look at the asset classes, the data cycle and an overall review on where we think the market's heading next week. So let's make a start then. So the week, the 2nd to the 6th, Euro dollar minus 105. So over that period, over the week, or the last trading week we've had, the Euro dollar as an FX pair lost 105 points or pips, Euro yen minus 54, Euro pound minus 52, pound dollar minus 25, pound yen plus 30, and dollar yen plus 61. If you plug that into the model, you get the Euro being the negative opposed driver at minus 211. Front and back door flows mainly going into the dollar at plus 191, into the pound at plus 57, and the yen was the negative rock at minus 37, and that was an activity of plus or minus 248. Right, so over the week then we've had a weak Euro opposed, driving flows into the dollar plus 191, and a bit of backdoor flows into the pound at plus 57, and the yen was slightly soft at minus 37, and we've had a big push up in equities really this week, so you've got a bit of yen transmission there. Right, we're going to stop it there and then move on to the next section, so don't go away. Right, welcome back. This is the asset classes, so let's make a start with the US dollar then. Basically the US dollar broke out, it came back, and it's now had a big pump up on Friday, and it's just sub the highs. So the dollar's was weak, but it's very strong, relatively strong now, but just sub the highs. Gold, as wouldn't really like a strong dollar, and it's 0.35 from the floor, and oil's come off a little bit as well, 0.36 from the floor. Wall Street had this sort of treble top arrangement, and it's now broken to a new high. S&P likewise, it's been breaking new highs, and it's resting at a high, and the tech broke out earlier and it's just come back a little bit sub high. So that's where we are with equities. US 10-year then, this is the price. We've got this big rise in the price, it keeps breaking higher, and now we've had this on Friday, we've had this increase in yields, drop in price. It's now 0.38 from the high. It's come off about nearly 38% from the high. Bund's got this breakout from the price, lower yields, and they've just come back a little bit, not as much as the US yields, and that's arguably why we've got a little bit of euro dollar softness, one of the reasons. Copper, you had this big chop, and then you had this big breakout, then it came right back, and it's now 0.40 from the floor. US steel gained a little bit by the infrastructure bill, but the infrastructure bill actually is very little to do with infrastructure if you look at it closely. It's only about 20% infrastructure, but anyway, that's besides the point. US steel is now operating at 0.40 from the high, so it's above half marks, but it's still a little bit soft compared to what it could be. So that's where we are. We'll stop that there, and then we'll look at the data cycles, which is our version of the economic calendar. So don't go away. Right, we're back again. Let's have a look at the data cycle then. So the China data cycle is pretty much neutral at the moment, so not up or down. The dollar data cycle is neutral on the tier 1 but very strong on the tier 2. So the dollar data cycle is definitely on the up. Euro data cycle is neutral to on the up. Sorry, the German data cycle neutral on the way to on the up. And the Euro data cycle is pretty much neutral. The Euro being the block of 27 nations. Right, so what else we got? The yen. The yen is neutral. The pound is neutral. The CAD is neutral to negative, to soft. The AUD is neutral to negative or soft. What else we've got? We've got the NZD. The NZD is neutral to on the up, and the Swiss is neutral to soft. Right, so let's have a look then. What have we got? We've got predominantly neutral data cycles at the moment, with marginal increases and decreases in them. But the key takeaway, excuse me, is this dollar data cycle is a standout. It's positive in amongst a sea of neutrals. So you've got this strength in the dollar complex data cycle. Right, excuse me again. Right, so let's have a look at the flows and then make some sense of what's going to happen then. So, if you remember, where are we? This week we've had the euro negatively driving in an opposed manner. So you had the weak euro minus 211 driving flows into the dollar, into the pound. Now the Friday, which was the last trading day, we had this big pump up in the dollar, and the model shows that the dollar was the unopposed positive driver, with the euro being the main loser. So that's where we are there. Last week, which was the 26th of the 7th to the 30th of the 7th, in terms of trading week, Monday to Friday, we had the dollar was the negative unopposed driver at minus 320. So the dollar was very soft last week, and it was driving mainly into the pound, the euro, and the yen was pretty static. So you had a very soft USD. So there's plenty of elbow room for this rise in the dollar, which we actually suggested would happen on the Friday if you look at our daily briefing. So that was a relatively clear-cut situation. What's going to knock it about next week? Well, Monday the 9th we've got China CPI. Tuesday we've got a very light day today. Wednesday you've got German CPI, US CPI. Thursday you've got GBP, GDP, and Friday you've got Michigan consumer sentiment. So it's a relatively light data week. Tuesday's pretty non-existent, but basically it revolves around CPI data, and a bit of GDP and a bit of consumer sentiment. So there's less going on. So we'll see how this sets up. So if you look at the majors, then, so you've got the dollar, the euro, the yen, and the pound. Well, the dollar has clearly gone from, let's say, last week it was out of favour completely, and now Friday we've had this big ramp up in the dollar. So the dollar's basically start reversing. The dollar index is not at its previous high. There's a little bit of manoeuvring room there for this for the dollar to go higher, and given the nature of the data cycles and the weekly data calendar coming up, it's likely that we're going to see a continuation in dollar strength. Now, the main, as we said, the main losers. Where are we? The second, the main loser was the euro, and the pound was pretty static. Now, it's quite possible that the euro is starting to taper off, but the pound is quite likely to come off next week, and the euro is likely to steady out to be neutral. And the yen, you've got this equity transmission. Equities are broken these highs. There's no reason why equities aren't going to carry on, given the sort of environment we're looking at. So you're likely to see downward pressure in the yen. So you've got a positive dollar, a negative yen, and you've got a neutral to soft euro, and the pound is quite likely to come under pressure next week. So basically that's where we are. So dollar, euro, yen, pound. So that's what we're looking at really in our view, and obviously we'll fill in some more on the Monday daily briefing as we see the Asian flows. That'll give us a clue as what's happening in the commodity currencies and all the rest of it. Now the AUD USD, which we suggested to short, that's pretty soft at the moment. It all depends on how things punch out on Monday. So as to the commodity currencies, the CAD. The AUD and the NZD. So basically watch out for Monday's briefing and then we'll take it from there. But the big takeaway will be continued dollar strength. It's likely that we'll get yen weakness off the back of the equity transmission, and the pound is likely to be in the sights for being soft. So I hope that was useful. Thank you for watching. See you again Monday morning. Thank you.